Enterprise Finance Daily, AI, Bonds and Bank Risk, Tomorrow's Money Map. Forward date, July 10, 2026. Tagline, Daily AI-powered insights for finance professionals, investors, and enterprise decision-makers. Disclaimer, news only, not legal, medical, financial, or official advice. Do not treat anecdotes as advice. Opening script. Welcome to Enterprise Finance Daily, Banking, Risk, and Corporate Market Insights, forward dated for Friday, July 10, 2026, built from today's finance, banking, insurance, regulatory technology, capital markets, and AI in finance headlines. Today's story arc is simple. The financial system is not slowing down, it is being rewired. From bond market plumbing in India to wildfire risk models in California, from SOC 2 compliance in tax technology to on-premise AI infrastructure at JPMorgan Chase, the enterprise finance stack is beginning to look less like a back office and more like mission control for a multi-planet economy. Google Trends Public, Trending Now, metadata showed heightened search interest around Trump-Iran, while market coverage also connected renewed Middle East tensions with oil, bonds, and inflation expectations, giving finance audiences a timely macro hook for today's script. Google. +1. Story 1: Corporate Finance and Banking. Bank balance sheets enter the precision era, the quiet bank moves that could reprice corporate finance. Banking headlines today show a sector managing capital with the precision of a spacecraft adjusting orbit, not the old rhythm of passive balance sheet maintenance. Bank of America announced redemptions of senior bank notes due August 2026, including $2 billion of 5.526% senior bank notes and $600 million of floating-rate senior bank notes, showing how large banks continue to actively manage funding stacks as rate expectations shift. At the same time, Bank of America's investor page points to its upcoming second quarter earnings conference call on July 14th, placing big bank results directly in the spotlight for investors watching net interest income, loan demand, capital returns, and credit quality. The wider market backdrop is still dominated by Federal Reserve uncertainty, with Reuters reporting that most major brokerages expected no Fed policy change through 2026, while some firms had shifted toward rate hike expectations. That combination matters for corporate finance because every debt refinancing, acquisition model, warehouse line, and revolving credit facility now has to be evaluated under a higher-for-longer capital cost scenario. In plain English, banks are not just lending institutions anymore. They are becoming atmospheric pressure gauges for the entire corporate economy. Bank of America. Bank of America.
Reuters.
Community and regional bank consolidation also stayed visible in today's data flow, with PCBB listing several July 2026 bank M&A items, including First Bank Midwest and the Farmers Bank, Aero Bank National Association and Adirondack Bank, and Independent Bank and High Point Community Bank. iBankNet's merger list, updated July 8th, also showed multiple July 2026 bank mergers and discontinuations, including Adirondack Bank, Zapata National Bank, and the Farmers Bank, Frankfort, Indiana. For corporate clients, this means relationship banking is being reshaped by scale, deposit competition, technology spend, and regulatory cost. The optimistic reading is that consolidation can create stronger technology budgets, broader treasury platforms, and better fraud control infrastructure for businesses that need modern cash management. The realistic caution is that local borrowers may face changing underwriting cultures when a familiar institution becomes part of a larger platform. The future of corporate banking will likely belong to institutions that combine local trust with digital execution, the way a lunar settlement would still need both human judgment and automated life support systems. PCBB. iBankNet. The forward-looking corporate finance implication is that treasurers should watch three signals: bank funding actions, regional M&A activity, and Fed-sensitive credit spreads. Reuters coverage showed that inflation and resilient labor markets helped push many brokerages away from earlier rate cut expectations, while BofA Global Research and Deutsche Bank were cited among firms expecting hikes. Higher funding costs can tighten credit availability, but they can also reward disciplined companies with strong liquidity, clean collateral, and credible cash flow forecasting. This is where the banking sector's people-centric mission becomes important. Access to capital is not just a market function. It determines whether businesses hire, expand, automate, or survive a shock. The most hopeful version of banking's next chapter is not a fully robotic lender. It is a smarter financial cockpit where bankers, CFOs, and AI systems see risk earlier and keep more enterprises safely in flight.
Reuters.
Subtopic angle. The practical subtheme is balance sheet endurance. Banks are retiring, refinancing, acquiring, and preparing for earnings season while clients are trying to understand whether capital will become cheaper, stay expensive, or become more selective. Bank of America's note redemptions are one example of active liability management in a market where funding cost and investor confidence matter. Regional bank merger lists show that scale remains a strategic priority across parts of the U.S. banking system. The Fed policy uncertainty reported by Reuters means corporate borrowers should expect scenarios rather than certainties. In script terms, this is the engine room story, not flashy, but essential. If finance is humanity's launch system for economic progress, bank capital is still the fuel mixture. Bank of America. PCBB. +1.
Reuters.
Story 2. Fintech and RegTech. Compliance becomes a growth feature, the trust badge fintech buyers suddenly care about. In RegTech, ComplyExchange became today's trust and controls story after securing SOC 2 compliance, according to coverage focused on rising vendor risk scrutiny. The company specializes in tax compliance, withholding, and IRS form management, which means its clients rely on it for sensitive tax and compliance data. The SOC 2 assessment covered the 5 trust services criteria: security, availability, processing integrity, confidentiality, and privacy. ComplyExchange also stated on its own site that SOC 2 compliance provides organizations with assurance that controls and safeguards supporting its platform have been evaluated against a recognized standard. This headline matters because enterprise buyers are increasingly treating compliance evidence as part of product functionality, not merely procurement paperwork. In the new finance stack, trust is becoming a user experience. Fintech. 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 ComplyExchange. The deeper signal is that RegTech is moving from help us file to help us prove. ComplyExchange's announcement emphasized growing pressure around tax documentation, withholding obligations, regulatory requirements, and sensitive customer data. Fintech Global's coverage also noted that the company continues to hold ISO 27001 certification and was recently named to the AI Fintech 100 for AI-driven tax compliance technology. That combination of security controls, operational resilience, and AI-assisted workflow is exactly where the compliance market is heading. Financial institutions do not merely want faster tools, they want auditable systems that can explain what happened, when it happened, who approved it, and why the process was defensible. In a space colonial metaphor, compliance is the airlock. It may not be glamorous, but nobody gets to the next module safely without it. ComplyExchange. Fintech. For finance leaders, the takeaway is that vendor due diligence is becoming a competitive filter. A fintech company serving banks, brokerages, insurers, asset managers, or corporate tax teams must increasingly show independent validation before the sales conversation can scale. ComplyExchange's CEO David Marley said security, confidentiality, and trust are foundational to the company's work, according to the company's announcement. That language reflects a broader market truth. Buyers want automation, but they also want accountability. The optimistic futurist view is that RegTech can reduce human drudgery while raising the standard for governance. The best systems will not replace compliance professionals. They will give them clearer dashboards, cleaner evidence, and more time for judgment. ComplyExchange. Subtopic angle. The subtopic here is vendor risk maturity. SOC 2 is not a magic shield, but it has become a widely recognized signal that a service provider has documented controls around sensitive data. Comply Exchange's public materials describe SOC2 as an ASPA-developed auditing framework that evaluates controls related to customer data protection over time. The 5 criteria named in the announcement map directly to the worries enterprise finance buyers bring into procurement conversations. As AI enters tax and compliance workflows, buyers will likely ask harder questions about evidence, privacy, and governance. This is a hopeful development if it pushes the industry towards safer automation. The future of RegTech is not paperwork with a chatbot, it is provable trust at machine speed. Comply Exchange. Fintech. Story 3: Risk Management and Insurance. AI underwrites the climate frontier. California wildfire risk gets a machine learning upgrade. In insurance, Dual North America expanded its partnership with Zesty AI to support wildfire underwriting for a new California homeowners program. Under the expanded agreement, Dual will use Zesty AI's Zephyr model to assess wildfire exposure at the individual property level. Fintech Global's coverage said the approach is designed to move beyond broad regional measures and toward detailed property-level analysis, including defensible space, vegetation, terrain, construction materials, and surrounding fire behavior patterns. Zesty AI's own product page describes Zephyr as an AI model that combines aerial imagery, fire science, and proprietary modeling to deliver property-level wildfire insights. This story is bigger than one underwriting partnership because it shows how climate risk is becoming a data problem, a capital problem, and a human resilience problem at the same time. In California, the underwriting frontier is no longer just county maps, it is structure-by-structure survival probability. Fintech. 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 Zesty. The financial market relevance is direct. Insurance availability and pricing influence mortgage markets, real estate values, municipal resilience, reinsurance demand, and household balance sheets. Dual's chief actuary Luke Woolmer said launching a California program requires a disciplined, data-driven approach to wildfire risk, and that Zephyr provides property-level insight for assessing exposure and differentiating risk within the same territory. Zesty AI's site says its wildfire product is approved for rating and underwriting in wildfire-exposed states nationwide. If property-level models can distinguish homes that are more likely to withstand fires from those at higher risk, insurers may be able to underwrite more selectively instead of retreating from whole regions. The hopeful version of the story is that better data can help preserve coverage access for more households. The realistic warning is that more granular risk models can also make weaknesses more visible, which may pressure owners, regulators, and communities to invest in mitigation. Fintech. Zesty. This is where the people-centric lens matters most. A wildfire model is not just a pricing engine, it can become a roadmap for hardening homes, protecting neighborhoods, and directing mitigation capital. Zesty AI's product materials state that Zephyr evaluates factors such as roof characteristics, defensible space, vegetation, topography, and suppression capacity. In a future where humans build settlements on hotter planets, harsher coastlines, or even off-world habitats, insurance intelligence will look increasingly like environmental telemetry. The challenge is to make the model useful without making communities feel abandoned by algorithms. The best outcome is an insurance market where data does not merely say no, but helps society understand what must be strengthened so more families can stay safely insured. Zesty. Subtopic angle. The subtopic is climate risk granularity. Dual and Zesty AI's expanded relationship shows that property-level underwriting tools are moving into live insurance programs, not staying in pilot mode. Zesty AI says its platform supports underwriting, pricing, compliance, and beyond through property-level intelligence and agentic AI. The insurance industry is under pressure to price catastrophe risk accurately while maintaining functioning markets for homeowners. Better models may help carriers identify resilient properties inside risky areas rather than applying one blunt label to an entire region. This is a technologist's hope with a humanitarian test. Precision should expand responsible coverage, not simply automate exclusion. The next generation of insurance will judge risk from orbit, but it must still serve people on the ground. Fintech. Zesty. Story 4: Investment and Capital Markets. India's bond market goes more electronic, the bond market door global investors were waiting for. In capital markets, Bloomberg announced that it facilitated its first electronic Indian government bonds trade, calling it a step in the internationalization of India's government bond market. The new workflow helps foreign portfolio investors access liquidity from international and domestic banks through the Bloomberg terminal. Bloomberg said the workflow allows investors to place, monitor, execute, and allocate Indian government bond trades within a fully electronic process. The system connects directly with the negotiated dealing system order matching platform, managed and operated by ClearCorp Dealing Systems in India. In a market where speed, transparency, and operational control matter, this is not just a technology launch, it is market infrastructure becoming more globally legible.
ProSphäre. 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 ProSphäre.
The timing is important because Indian sovereign debt has been drawing more international attention after India fully accessible RUP bonds were included in the Bloomberg Emerging Market Local Currency Government Index in 2025. According to Bloomberg's announcement, Bloomberg also said its electronic market solutions are used to trade in more than 175 markets, and that more than 9,000 client firms access liquidity from over 1,500 dealers through Bloomberg Electronic Markets. For global asset managers, electronic access can reduce manual processes, operational risk, and errors, according to Bloomberg's release. The market story is that emerging market bonds are becoming easier to plug into institutional workflows. In sci-fi terms, this is like adding a new docking port to the global capital station.
ProSphäre. ProSphäre. ProSphäre.
Investors will still have to think about currency risk, rate paths, liquidity, geopolitics, and domestic policy, but better trading rails can change participation behavior. State Street Investment Management's Vernon Lowe said implementation of the first fully electronic IGB trade on Bloomberg underscored innovation, efficiency, and liquidity in fixed income markets. Bloomberg South Asia head Varun Choudhary said the offering connects Bloomberg's global liquidity community with NDSOM and provides clients with a more efficient way to access liquidity in Indian government bond markets.
ProSphäre.